Hello, this is Mike Swanson. I run the website wallstreetwindow.com, and the odds are that you are watching this video because you found out about it from an email I sent out telling people about it. Now, if you're not on my email list, you're going to get on it. Click the link associated with this video to do that. Then you'll get my top stock pick for the month and all my future market updates. Now, what I want to talk with you about today is something absolutely remarkable that is taking place. I've been trading the markets now since the 1990s, well over 20 years. For 3 years, I ran a hedge fund. That was around 2006. And I wrote this book, Strategic Stock Trading. But what we're seeing is something I don't know if I've ever seen since the 90s. And that is, there has been a surge in individuals now doing trades in the stock market. Many of these people actually, for the very first time since the market took its peak in tumble in March. And interestingly enough, this morning, the Wall Street Journal had an article just about this, saying that free trades are drawing newbies into the stock market. The thing has a picture of this fella right here, Will Nelson, and he's using Robinhood to trade and play in the markets. And interestingly enough, according to Ameritrade, up until December, the daily number of trades being done was less than 1 million. That began to go up when TD Ameritrade went to free trading commissions. Charles Schwab did the same thing. But it completely surged once the market made its peak in March. And TD Ameritrade, in fact, has opened up 608,000 new accounts this year. Charles Schwab has opened up 609,000 new accounts this year. And 2/3 of these accounts have been opened up in March or April. So there's two things happening. The free commissions is provoking or encouraging people to do more trades, but the market drop is also making people want to get into stock trading for the very first time. And if you look at this, what you see here is Google Trends data showing us the number of times a keyword is typed into Google. Stock trading has surged. As you can see, this data goes back to 2004. More interest in stock trading than ever. And if you look at this, this is for bull market. And that also has surged up. More people interested in the idea that this market is a bull market than going back to 2004. Quite remarkable development. So you may think that the drop in the stock market caused people to sell, scared people, shook people's confidence up. In fact, the exact opposite has actually taken place. The drop in the market has caused most people to see it as a buying opportunity. In fact, so many people are so excited about the market that they're even opening up trading accounts for the very first time to try to guess bottoms in individual stocks or buy past big popular stocks like Apple and Facebook and Amazon with expectation that they will just go up from now on and that we're on the verge of some great boom once things start to open up in the economy. I'm quite skeptical of the reality of what the economy is going to be like. We'll be able to match the expectations of these people, but it is a fact. People are definitely buying, some even doubling down to make back what they may have lost before the drop if they had already been in the market. But this all, in my view, is both a good thing and a bad thing, because it's good for people to get into the market, to try to tackle the market, but it's bad because I fear that many of these people really, they're inexperienced. They don't really have a plan of how they're trading. They're just seeing things move, on a daily basis, and they see something up, they jump. And the fact of the matter is that there's 10 million new Robinhood accounts created in the past 12 months. 50% of them opened up by people who have never made a trade. And most of those people are 31 years or younger. Great for them to get into the market for the very first time, but I don't believe they really are prepared for what they're doing. And statistics have shown that most people lose money trading. In fact, there's a famous study done by Terence Odion in the 1990s analyzing hundreds of thousands of trading accounts during a giant bull market. Half the people managed to lose money even though the stock market was going up. And a third of the people basically matched the performance of the market, and less than a third beat the market, only 10% substantially. So if you're getting into this game for the very first time, those are the odds. Now, the good news about that is you're competing against people who are doing basically nothing when it comes to planning out their trades. They're just chasing stock market action. And if you plan entry points, exit points, it gives you a huge advantage if you're willing to take it seriously and not treat trading accounts like you're going into a casino. So what are these people doing? And this is what makes me pause. So what you're looking at here is the top positions owned by Robinhood traders, ranked by the number of people who own them. The most owned stock by the most number of people, and it's been this way for over 6 months, is ACB, a cannabis stock. But that stock, even though so many people own it and they've been owning it for months, and the number has actually grown in the number of people buying it, that stock has actually been in a very vicious decline. So these people are losing money by buying the stock or trying to hold it, hoping it will go up. But other stocks on this list are very questionable. We have Delta Airlines, America Airlines, Carnival Cruise Lines, stocks that, yes, they've been devastated in March, but their economic prospects are not good going forward. We cannot expect the cruise industry to recover overnight, and the airline industry is also in big trouble. Go look it up, stories about what's going on in the airlines. They don't expect many people to be flying for months. In fact, the CEO of Boeing was on CNBC this morning and said that he does not think we will get back, his business will get back to where it was this past February for 3 to 5 years. So, but it's not just these things that I think make these stocks troubling, but the overall trend of the stocks is a big question mark. And that is what you have to think about when you buy stocks or the market as a whole or a sector or a different asset class like gold or oil. You have to think, what is the trend? And I don't just mean daily price action, but what is the intermediate term trend, the long term trend, and you want to align yourself with them. How do you do that? Well, I use something called stage analysis to easily identify what the trend is in anything. And what you do is you look at the 200-day moving average, and if the price is below it, that 200-day moving average tends to act as resistance. If the price is above it, and you're in a bull market, it acts as price support. And typically what you want to do to beat the market is buy things that are beating the market, and do that with things above the 200-day moving average. Things below the 200-day moving average are not beating the market. You want things above. So if we flip and we look at ACB, it's a horrible stock. It's well below the turn-day moving average. It's been that way for months, and that's why it's been such a complete and total disaster. And yeah, it's a cannabis stock, but it's a cannabis stock that's losing money and has a good chance to actually go bankrupt when other cannabis companies can be successful. So fundamentals do matter in the long run, and that's why these airlines are also bad, because they're well below the turn-day moving average too. But what's above the turn-day moving average? Well, this is a stock, Newmont Mining. Newmont Mining is well above the turn-day moving average. I own Newmont Mining, by the way, but gold is above the turn-day moving average. Both Newmont Mining and gold are beating the market. Newmont Mining, if you haven't guessed, is one of the biggest gold mining companies in the entire world. So those are the type of stocks I look for, stocks beating the market, where I'm not trying to guess that this company is not going to go bankrupt, or there's going to be a government bailout or some silly thing like that. Look for companies with earnings really growing no matter what is happening with the economy. Look for stocks above the 200-day moving average beating the market. That's how you beat the market. And I suggest, if you're new to trading, grab my book, Strategic Stock Trading. You can find it on Amazon.com. Just go there, type Strategic Stock Trading, arm yourself with this. And stay tuned for my next video update. And if you're not on my email list, click the link associated with this video and get on it right now. And then you'll also get my top stock pick for the month.